right, cool. So first off, welcome everybody. Thank you so much for being with us here tonight live on Zoom. We have Igor here with the law office of Yurlu Moshes. Yuriy will be on in a moment. He'll be with us as well. So a few quick things, guys. This is a interactive event, so feel free to voice yourself if you have a question, something that we said that you're not sure of, you didn't understand. There's a few ways you could ask your question. There's a Q&A box on the bottom. There's a chat box on the bottom. And there's also a way you could raise your hand if you're not shy and you want to talk through your question with us. We'd be happy to have you there live with us as well. So feel free to use any of those different options. Igor, I want to just do some quick introductions. Igor, we've been working together for a couple of years now. I mean, you knew me back when I had hair. We were closing deals. So that was a lot of fun. We definitely, seen some things back when I was in real estate doing sales. But tell everybody, I guess, a little introduction about yourself, who you are, what you do at the law office of Yurlu Moshes, and, why are you someone that they should be talking to?
Sure. Thanks, Max. Appreciate having us here. So my name is Igor Lipkin. I am Director of Business and Development for the law office of Yuriy Moshes. And like Max said, his hair kind of shifted. I also had hair when we met, so that's a possibility that we clashed that way. But in any case, so what we do is I've been with the law office for a little bit over a decade now, and known Max for several years. We've done a lot of business together, and the most important thing about any business is the service that you provide to your clients. That goes for communication, that goes for follow-up, that goes for responsiveness. I have a mortgage background for the last 16, 17 years now. So I've seen the different markets shift from, the blow up and bailout of 2008 now with this COVID-19. So it's very interesting how everything is interchanging. And, that's who I am, and I'd love to discuss more.
Absolutely. And it's definitely, a big asset to have been around and have the experience of different markets and how they react and how buyers and sellers react and just actual traditional, transactions. I mean, I'm sure that's changed a lot for you, and we'll go into that. So guys, tonight we're going to talk about pretty much just, how how the entire market itself has changed and what that means to our businesses. What's the new normalcy? What do closings look like? So you guys do a lot of closings. I mean, give us an idea, like how many deals you guys normally closing, like a month?
I mean, they all vary, month to month. Obviously, during the COVID-19, it slowed down. But as of last week, I would say week and a half, the deal sheets really picked up. The closings really picked up. I think more people are trying to get the deals done. The rates are historically low right now on commercial and residential. So people are taking advantage of the low rates. It's almost as free money out there. So, we changed a lot of our style of closing. So everything's done, as you can see, through Zoom. Everything is done virtually these days. I just literally finished a closing about an hour ago, and it was a curbside closing. It was very interesting. It was actually a commercial refinance where there was a few properties collateralized, and it was I don't know, maybe 600 pages or so, maybe a little bit less, because everything had to be tripled and quadrupled of original signatures. Okay. How many closings we do? Listen, we can't put a number on the average. It could be anywhere between 30, 40, 50 closings a month.
Right.
But the good news about the law office of Yuriy Moshes, and the logo you see behind me, is that we are a team, right? Just like you guys have processors, you guys have your underwriting staff. We have our paralegals. We have a couple attorneys. We have a dozen paralegals. So we work as a team. So if Yuriy is unavailable or another attorney is unavailable, we always have somebody covering each other's backs. And that's important in this industry where if somebody's doing the closing, somebody else could pick up the phone and answer a client, a new client, or closing client. Teamwork.
Absolutely. Teamwork is extremely important. Even you froze for a second. Are you there back? Okay, we got you.
Yeah, I'm here.
So, like you said, having a team is really important. Every business needs one, whether you're an investor, having someone on your team, such as myself. By the way, let me just introduce myself real quick. For those who don't know, my name is Max Chera from Express Capital Financing. We deal with hard money, mortgages. We're pretty much here to help you leverage yourself so that you're not using so much cash when you're investing in real estate. But what I was getting back to was having a team is important. You know, I myself as a lender need to have somebody like Igor and the law office of Yurlu Moshes on my team, so I can go to them with questions, as well as having a contractor, having a title company that I could refer to. So it's really important for us to build our team and know that who you're working with also has a team and there to assist you throughout your process. So, I mean, Igor, you're telling me now that everything's kind of changed. You're doing your closings now all through Zoom. I mean, has that complicated the process? Has it made it simpler for you? Tell us more about that.
So good question, Max. I feel like we've been kind of growing and being ready for this. We've actually recently changed all of our systems, CRM systems, to the cloud. We had a great CRM system to begin with. Now I feel like we enhanced it even better. We had to do
Nice.
electronic signatures, so we don't need to meet face to face. We've been doing electronic signatures for a long time now with contracts, addendums. We do still sometimes meet with the client. Like I just said, we had a curbside closing with the title closer and the borrower, but there's no sitting in a room with a bunch of people breathing on top of each other. It's just not going to happen anymore. And that's the
Right.
new normalcy that, you know, either the title company or a closer will just meet with the borrower. They pre-sign the documents, they notarize it, boom, they mail it out, and they'll fund the next day or whatnot. There's a lot of coordination when it comes to closings,
Okay.
but it all comes together if you know what you're doing, right? So end of the
Right.
day, you know, you and the bank attorneys and the bank work together to get a common goal to finance and fund our clients.
Right. And that's what it's all about. It's about getting the deal done and closing it. So, so Igor, I mean, so now that you've been preparing for this in a sense, maybe not even knowing, just by trying to get more virtual and just get things more systematic. Tell me, I guess, about have you seen any delays in your closing due to this, or has it been more streamlined now for you? Has it been quicker?
That's a great question. You know, it depends what closings we're talking about. If we're talking about commercial, if we're talking about residential, co-ops, condos, co-op and condos, there's been a hurdle because of the different parties that are involved in a co-op transaction, for instance.
Okay.
But you know, and the condo goes the same way. You know, there's management that needs to review the documentations. But when we're talking about commercial purchases or residential purchases, you know, we do have an extra clauses in the contract, is what we put. I think I saw Yuriy jump in,
Yeah,
and
I'm
there's a
here.
COVID-19 addendum. He is the man of the hour. So there's a COVID-19 addendum that we put in just in case, and you know, and maybe Yuriy could elaborate more on the COVID-19 in a minute. We also put a funding clause just in case the banks today, as you know, a lot of banks, especially non-QM, then just not funding. You know, we went from closing deals to just stop funding altogether, and a lot of these different flip and fixes, and a lot of these different lenders. So it's actually fantastic that you guys still have a streamline of money and a line that you can actually finance, you know, flips or rehabs or whatever other commercial loans that you guys are handling, because a lot of banks out there just stop funding. So that's the hurdles that we have going on that with present deals, and of course we try to, you know, push them to you guys to make sure that, hey, you know, we know a bank that is still funding in this current pandemic, you know,
Yeah.
and what we see is we put to make sure that funding clauses is a huge savior for our clients, that in case the bank does not fund for no fault of the borrower, we're able to get the borrower out of the contract and get the deposit money back. So that's huge. COVID-19 is very similar to that. Yuri, do you want to touch base on the COVID-19 contracts, what you've seen on your end?
Yeah. Tell
Uh,
us about like what changes you're putting in there, what clauses you're trying to put in there just to protect clients, and what they should be aware of.
sure. So basically, there was back
First,
in
introduce
March when
yourself.
everything. You hear me?
I hear you.
Yeah, we
There
can
you go.
hear you. Go ahead.
Well, first of all, thank you for having us. I'm sorry I had some technical difficulties and I came on a little late. Late. Yeah, I don't know how to use a Mac apparently. So yeah, it took some time to figure it out, but now I'm here. So thank you for having us, and you know, everyone, thank you for participating. I'm glad everyone's here, healthy and safe. That's the most important thing to be, you know, in at our time right now. Now let's touch a little bit on the COVID information that you guys were discussing. So basically, back in let's say middle and towards the end of March, you know, when there was so many unknowns with COVID, this right, there was some language that was generated to protect purchasers and sellers on both sides in the event that either party gets sick and their financials get impacted by COVID, and B, because there were so many shutdowns of towns, recordings, clerks' offices, and that lenders, skeleton crews. Oh, we heard all of that before. I'm sure every one of us has dealt with something in the last few months in regards to that. So basically, what was happening is the normal process that would take, let's say, a week or two to obtain, whether it was title or something else, was taking 6 weeks, 8 weeks, and we didn't know how long these items are going to take. So the language was added to contract was to protect the buyers and sellers in the event that there was a delay due to COVID, that the contracts wouldn't just potentially go into time of the essence, but in fact they would extend for 30, 60, 45 days. It was all based on the agreements between the seller and the buyer. And B, in the event that somebody gets, gravely ill, God forbid, or their financials are impacted by COVID, what would happen is either the contract again would get extended to give additional time to for that individual to recover, or B, give the option to terminate the contract and receive the refund, or have the ability to terminate the contract on the seller side without being sued for breach of contract. So there was added language. That was the added language that I've seen mostly everywhere, and I still do see it to an extent now. However, I think we've kind of figured out what the trouble spots are now, as far as let's say title searches, or lenders have really stepped up their games and started whether speeding up the the lending process, or just coming back to some of the previous programs that were discontinued for a short period of time, and coming back to those programs as well. So while we're not back to anywhere where we were, let's say even in February, as far as the time frame goes, at least on the title side, on the on the lender side, I mean, Max, you could probably attest to that. The process has definitely sped up since the end of March.
Yeah, the processes on the lending side definitely, sped up. There's a lot more good news coming out every single day. So we're working towards that, that same goal as everyone else is. Hey, how do we get back to normal? How do we get back to the day where we were yesterday? Things are slowly happening. If I were to try to give a date, I'd probably be lying, because it's probably impossible to tell still. But the good thing is just to keep your eyes on what's happening, which is the secondary market opened back up, so people are still being able to move their notes around. So that opens up a lot of different potential for lenders who may be selling their notes, or were planning on selling their notes in the future. Now they're okay with originating again. So there's a lot that definitely happened there that helped out. But there's one thing that I kind of want to touch on that Igor said and Yuriy both said, and we even said it before a little bit, but I want to bring it back in. How everyone has the same goal right now, which is how do we get to the closing table and close? And they're all doing it together. And that's a super important thing, because when you're in a transaction and one guy is fighting another guy, one guy wants to close, one guy doesn't want to close, that's when problems happen, nightmares happen, and we're all trying to avoid that. So obviously it's good to make sure that you're working with people that know how to work with a team, not only have a team. So, that's all really good to hear. Now, another thing that we were talking about, and that I'm sure a lot of people have questions on, is there's a lot of talks right now. Obviously, many homeowners have already, spoken to their mortgagees, and they offer them whether it was a deferment or a forlow. How does that really come into play? What does that mean to these homeowners that have actually taken these options? And what is your take on that, just in general?
Igor, you want to speak to that? Igor freeze?
I think he's frozen.
I think he's frozen too. All right. So first of all, furloughs just for people who are not familiar.
So you're coming out really fuzzy. But are you talking about the forbearance?
Oh, you're in the net, Igor.
Is it just me, or is it? Oh,
You're here. We hear you.
We hear you, Igor. No, not anymore. Anyways,
Okay.
so once he reconnects, I'll have him touch base on it a little more. The way forbearances or furloughs is basically, you reach out to your lender, you ask him for additional time to make payments because you've been affected negatively. Your financials have been affected negatively by COVID, which, what are they, 40 million people around the U.S. are filed for unemployment. So a lot of us have been affected. And basically, the lenders, what they do is they give you some time to make another payment, and they renegotiate the terms either of your loan, or sometimes in the beginning they were saying, well, in 3 months you don't have to make payments for 3 months, and in 3 months you have to make a balloon payment. Some of them will add it to the back of your loan or give you an ability to make those payments over time. Igor, you want to expand on that a little more?
Yeah, sorry guys, I lost you there for a second. So forbearance, deferments, big difference. I've touched base a lot on this topic. In the commercial world, a lot of times they don't know what a forbearance is and they don't offer it. And even if they do, like Yuriy just said, they'll give you 3 months and they expect to get paid. A forbearance doesn't mean your loan is going to get forgiven. They expect those payments to get paid either 3 months from now, or 6 months from now, or 12 months from now. Depends on the investor of the loan. So to understand, in the residential world, you have Fannie, you have Freddie Mac, VA, FHA. Those investors, government-owned, they will give you up to 12 months forbearance, meaning that your credit score is not going to get affected in a sense where it's not going to get reported as a lateness, but it's going to get reported as a forbearance agreement, which will prevent you on a residential side to get a mortgage and obtain a mortgage, because the way that current banks are looking at a forbearance is that you're not making a mortgage payment because you're telling the bank you're having a hardship. If you're having a hardship, if you're trying to refinance right now or purchase another property, why would I give you a mortgage if you're having difficulty to pay your first mortgage to begin with? Because you either got furloughed, or you're not working right now, or you're just taking advantage of the situation. But I don't see a big advantage for people that can pay the mortgage. Pay the mortgage. If you're unemployed, if you truly cannot afford to purchase to pay the mortgage, and you have to go on forbearance, just call the bank, find out what exactly does it mean for you, because every bank is different. You have Wells Fargo, I have Wells Fargo. My investor is Fannie, your investor is Deutsche Bank. Two different programs. One will tell you pay me 3 months from now, or everything do it up front. The other one may say, up to 12 months, Fannie and Freddie allows you to forbearance or defer your payments, and then they could put in the back of the loan, which is not bad for those that are struggling to not pay the mortgage. If it's the difference between putting food on your plate or to pay a mortgage, put the food on your plate. But if you can pay the mortgage, we always recommend for people to pay the mortgage. Okay, and due to the fact that there's forbearances and the banks, the servicer, is taking a huge loss because they still pay the investor. Okay, so that's what people don't understand. If my service says SLS, which is specialized loan servicing, or SPS or Aquin, or any of these servicers, even though they're giving you a forbearance and you're going to catch up later on, they're still paying the investor every single month. So they're taking a huge loss, which is why a lot of the banks tighten up and don't want to fund deals, okay, today, or have a higher credit score restrictions or bigger down payments. So that's all bringing the economy up to their knees. But at the same time, the rates are super, super low. So people ask me all the time, is it a good time to flip? Is it a good time to purchase? And the answer is always going to be yes. It's a great time to purchase because the rates are low. Take advantage of that. You could potentially get a property a little bit under market value, or whatever makes sense, depending if it's commercial or residential. We feel like commercial and residential, there's going to be a huge, I don't want to say surplus of properties, but more property is going to go on the market, in my opinion, and because if they can't pay their mortgage and their forbearance, and they're now 3 months or 6 months or 12 months behind, even though they're not really behind, but they have this big debt they're obligated to pay, their incentive to sell the property is greater now. And if they can't make that payment, then they get hit right away with a 90-day or 120-day latenesses, and now they're in a foreclosure initiated. So now they're saying, now it's a foreclosure, how do I get out of it? if they start showing latencies on their mortgage payments, they can't refinance anymore. Okay. If they have equity, which some people, FHA, VA, who put down very little down payment, even conventional, may have no equity in their property, and that 90-day or 6 months lateness could put them upside down, which is a great opportunity for people to, to seek out these properties that are, newly or freshly in foreclosure and potentially, get a short sale, which is something that the law office of Yurlu Moshes have been doing since early 2010, about 9, maybe about 10 years, 11 years ago. We've done tremendous amount of thousands and thousands of foreclosure defense cases, as well as short sale negotiations, and we still do. We get brokers all the time calling us about negotiating short sales, about foreclosures. Okay, I see that these forbearances can lead to next year, maybe the year after, but foreclosure is inevitable for a lot of these people. They cannot make that payment up in 6 months or 12 months from now. So my recommendation to the homeowners is, hey, call your lender, find out what they're willing and not willing to do. It's so unpredictable right now that the lenders sometimes, or the services, they have no idea. They'll just tell you 3 months forbearance, and then they'll internally review you for a modification or some kind of resolution. So they don't have a solution for you just yet. But every month that we come back to normalcy, maybe they'll come back and say, we'll give you another 3 months, or they're going to try to work with a homeowner, but essentially they're going to want to get paid. Okay? And as an investor, this is where you come in to potentially help them, get the property or get out of the situation that they're currently in. Right, exactly. Especially if they have no equity in the property.
Right.
So be prepared for that. And I'm sure, in financing, you probably have to close quickly. And that's maximum, that's where you guys come in, to make sure you have somebody reliable that could fund you, so you could go into contract knowing that, hey, I'm going to be able to get funding for these type of transactions.
For sure. And Igor, you're saying something really interesting. I'm going to sorry to cut you off, but this is really interesting because there's a lot of speculation out there right now in the market. We know whether someone believes that there's going to be a surplus of properties coming to the market, whether they believe, oh no, well, everything's kind of going to, go back to the way it was, perfectly normal, because of, all these programs and things people are putting out there. So it's really important to really be able to look at it from a detailed perspective, and someone that's dealt with these things, in detail. To be able to, again, it's still speculation, but obviously to at least understand to what we're coming to. So Igor, So are you saying that you think that there's going to be a surplus of property similar to what we've seen in 07 and 08, where there was just short sales and foreclosures, all over the place because they were, underwater with their properties and property values went down and so on and so forth?
I don't think it's going to be to that extent. There's definitely going to be a surplus of properties where they're going to be in foreclosure. There's already, I think, an increase. I don't remember what the exact percentage was of 90-day latenesses across the country already.
Yeah.
There's 90-day latenesses, because not every bank will give you a forbearance. Some bank says, hey, send me a financial hardship letter or financial hardship documents. And there's no guideline like we used to be on a HAMP modification where you could say it's 31% debt to income ratio, and that's what you need to qualify. There's no qualification guidelines, right? So people don't know what to submit. They submit nothing, and they just get defaulted, right? In 2007, 2008, and I was in 2003 and 2004 doing these subprime mortgages where you're getting 106% financing, and then the bubble bursted. So now your $600,000 property is worth $500 or $550, and you have a $620,000 mortgage because you got to cover the closing costs, and you're upside down. And most people didn't spend $1 on these properties, so they piss on the walls and they walk away from them or stop paying the mortgage, right? It's easier to stop paying the mortgage if you didn't put any skin in the game. In today's economy, I feel like more people put at least 3.5% on FHA mortgages, or 3% or 5% down payments, and they're a little bit more reserved to the property that they want to save and keep it. I don't think it's going to be a surplus of foreclosures like they were in 2007 and 8. But history tends to repeat itself. And we were due for a bubble or for a cycle a few years back already. Unfortunately, the pandemic is something that nobody could foresee, but something had to give to, bring the real estate back to the numbers they were. But I feel like you can be at the market value or below market value is what that's, what I think you should be. Yeah, I think in commercial world, I really, truly do believe there's going to be a lot of surplus of properties that you could pick up within the next 6 months to a year. mixed use preferably, okay? And I say mixed use because you want to be able to have some residential where people have to live. That's always going to be the case, because the commercial space, a lot of times people, they may work virtually or on the cloud or in the clouds or, God knows where in the world. So they may not need that commercial space, but unless they use it for themselves, and they just rent out the residential space where somebody has to live. And I feel like in the commercial world, the properties are sitting there vacant. The courts are not going to open up till August to evict somebody. Foreclosures right now is on hold. Nobody could get foreclosed on. The CARES Act is going to come out with programs and guidelines to try to help and assist people. So it's going to take some time before an opportunity for an investor to be able to pick up these properties. But eventually, they're not going to be able to get caught up on the payments. And unfortunately, the homeowners, and fortunately for investors, sometimes there's opportunity to be made there, but not like it was in 07, 08. I don't see that same bubble bursting. If you look at the market today, we speak to brokers literally every day, all day long. When Zoom calls, Yuriy and I, we're closing deals. We've seen a lot of listings go up last week and a half, 2 weeks. I feel like because of the unpause. And as soon as we head into phase two, I feel like people are just waiting to put listing up. Now, those property might not be selling at a over market price. Like, people are just inflating prices today. A $1 million house is going up for $1.2 million, but you might be able to get it for $990 or $1 million, little bit hairline over $1 million, and at a market price or below the market price. Depends if the seller is motivated to sell, right? So if I want to get out of Dodge and I'm looking to get out Midwest or go move to Florida, yeah, I'm going to give you 10%, 15%, 5% off the sticker price. And I just want to motivate somebody to buy the property, and I was speaking to realtors before, and, the one thing they said is, I'm more interested in a qualified buyers. And that stuck with me. Said, qualified buyers. Who are the qualified buyers? Those are essential workers today because everybody else is unemployed. Okay. But if you have an avenue, an area where you have an investor where either they have the money or they could finance the money because, you always want to leverage, that is gold if you could find a property, that you can, turn into profit.
Absolutely.
And I definitely see the surplus of properties, but not as it was in 2007, 2008.
Wow. And that's really, you hit it on target with what you said with motivation. Motivation is key in this business, especially when you're working with a seller. That tells everything. Somebody who just wants to say, well, you know what, if I could sell it, I'll sell it, versus somebody who needs to move. You're talking two completely different situations, and obviously you'll have a lot better traction and movement with the motivated person. And another thing that you touched on also is that, we're walking into now a buyer's market. Now, obviously, New York has been considered, I'll say Manhattan has been considered a buyer's market for quite some time now. But Brooklyn, on the other hand, I would say was always, somewhat of a seller's market. So it's really interesting to see how, how fast that kind of changed, and how now all of a sudden it's the buyers that are in control, in a sense, because the fact that you're out there looking for a property says a lot about you right now. It means that you are serious. You are willing to go out there. You're willing to get outside because your business is not going to wait, and you're looking to buy something. So I 100% agree with that. If you are a realtor right now, you should definitely be looking for your cash buyers, for your guys that are using hard money, that are not scared, ready to move. They know the real estate market. And like Igor said as well, we were due for a bubble. One thing we can't cheat is nature. It always knows how to get us one way or another, and it brought it to us. So hopefully now there'll be a lot more, not hopefully, but, because, we don't want to really wish anyone bad, but there should be a lot of opportunity in the market, and for us to be able to go out there and help a lot of people out that are in bad situations from COVID. So there's a lot of good to come. Now, another question, Igor, or actually maybe even this one should be for Yuriy. I think I asked this to you, is like, hey, I know you made some changes to contracts, when COVID first came out, that we kind of spoke about earlier. Are there any new changes or stipulations or clauses you might add to your contracts moving forward that maybe some investors should be aware of or think about on the top of their head?
I think it relates back to what I was telling you guys earlier, and that's the fact that really just with dealing with counties and cities right now, in the city right now, it's just taking a lot longer to get titles back. So, I actually have a contract flip that I'm working on now, and it's with the town of Hempstead. It took 6 weeks for the town to come back with municipal searches. So where everyone was ready to go within 2 weeks, at the end of the day, what was happening is because we couldn't receive full title, and so and the delay was so long, it took 6 weeks just to get that back. So now we could close. So when just you have to keep that in mind when making the offers, or if you're on the seller side, or accepting offers, is the fact that you could be delayed potentially by these city and state agencies or local agencies due to the fact that they're so short-staffed. And then this one in particular, there was like one person working twice a week, so I think they're still only up to I think they're still in the middle of March, the orders going back to providing documents on those title orders. So if you could think about that, we are in June, and they're almost 2 months back. I mean, I understand some Long Island is opening up, and so is the city, but at the same time, it doesn't mean that these processes are going to speed up. Something to definitely keep in mind of, and I continue to put language into contracts stating that if the delay is caused because we're the inability to receive title timely, then that delay doesn't kill the deal, or doesn't penalize the buyer or the seller. Again, as many of us understand, without full title, neither will the buyer won't close, and then neither will any lender. So
Right.
That's the experience that I'm seeing now that's been affected by by COVID.
Right.
One of the other things that I just want to piggyback what Yuri said, you could definitely put language in the contract, until we can receive title report and title clearances, you cannot close anyway. So if you want to do what we've seen investors do, 2-week closings or 3-week closings,
Right.
those are a little bit tighter, but you could add language in the contract regarding clean title and clearing title. So that's very important factor that we've seen, that it is taking a little longer to schedule closings. I mean, it's just coordination, like I was saying before. The way you meet with an attorney, with your clients, and the sellers have to pre-sign it, and the documents have to be drafted beforehand. And if you don't meet that deadline now, we had a closing on May 29th, and now we have a closing on June 5th. So some documents have to be re-signed. You have to meet with the clients. We do curbside closings. I mean, literally, in the car, the guy's closing documents on the hood of the car. We're notarizing the documents. It's the new normalcy today.
Wow.
One thing I did want to mention also, guys, is unfortunate to the COVID-19, there's a lot of deaths, as we all know, and these deaths lead to people who are owners of properties and wealth, and homeowners who may have wills, may have not have wills, and who have kids who take over the property. So in estate attorneys or in estate circuit courts are very limited to what's going on right now. They're closed, and some things they can work on. Um, so that's a good source of opportunity, is estate attorneys. If you could reach out to estate attorneys and say, hey, if you have any clients that currently, went through a difficult time and don't have the money to pay for an estate to become the administrator of the estate, in order to sell this property, that's where potentially you could come out on top and be helpful and create opportunity for yourself.
Absolutely. Deaths have always been one of the top reasons for property sales, and it always will be. Now, unfortunately, there has been a lot of them, so there will be a lot of opportunity out in the market for those. Even other things such as divorces. I mean, I know it might sound crazy,
Sure.
but some people, they're stuck in their house with their significant other. I mean, that could lead to some crazy stuff.
Sure.
You also
Divorce rate is
have
definitely going to go up.
not a great time to be a divorce attorney. But yes, I mean, there's going to be a lot of opportunity. There's many different facets. Keep your eyes open, whether it's deaths, divorces, even people moving, because now let's just say, they can't afford to live in New York anymore. They want to move to New Jersey or somewhere similar. It's a cheaper cost of living. People will make that decision for them and their family if they need to. So there's going to be many different facets. Keep your eyes open, keep prospecting. Now is the time to build your pipeline. I say this on every webinar, and I will continue to, because of how important it is. the more you do now, the less you will need to do then, because everyone will already know that you are there to help them. You will have made your relationships. You will have spoken through everything with them. And at that point, all you'll need to do is put it into action. So keep making those calls. I want to open up now to question and answer. You know, thank you so much, Yuriy and Igor. You definitely give us a lot of information about, you know, what the new norm is and how things are kind of flowing. But I want everyone to be able to kind of voice themselves. You know, if there's something that we didn't discuss that you're thinking about, please do put it in the chat, raise your hand. We'll allow you to speak, or use the Q&A button on the bottom. We'd love to hear from you. And I guess, Igor, in the meantime, oh wait, we got someone. Oh no, it's you. So you just put your contact information, guys. If you do have any questions, please do reach out to them. We'll also email it to you guys with a copy of this webinar so you can watch it at home if there's something you missed or you just want to go back and listen to it. But we'll send you all their contact information. But there are definitely some people you want to speak with, get to know, learn about them. They've been extremely helpful through all of our transactions, whether it's contacting them and getting an answer right away. Being able to communicate is super important in real estate. So by all means, and I guess I'll let you guys speak a little bit also while they bring up their questions. Tell them a little bit about what you handle, what you don't handle, like, or, you know, what kind of deals are for you. Do you only do closings? Do you also do, I know you mentioned short sale negotiation.
Yeah, 90% of our businesses, 95% of the law firms specialize in residential, commercial, real estate transactions. So we either represent the banks, we represent the borrowers, the sellers to real estate related closings. We have been in foreclosure field probably, you know, for the last decade or so. I think every broker in New York knows who we are and tries to negotiate short sales. So you know, when it comes to negotiating short sales, not everybody knows how to do it properly. People just know I could get potentially this number, but they don't know how to read the HUD. They don't know how to order title in advance and get all the liens and properties. And that could be another 3-hour conversation on short sales that we can have with you. But end of the day, you know, that short sale negotiation is something that we definitely can assist people with. But mostly, I mean, listen, we don't want to be jack of all trades in a sense. We concentrate on one specific area, and that's in mostly real estate. We do have an attorney that handles employment matters and discrimination. And then we do have real estate litigation matters. So if you didn't get paid commission or if you have some kind of real estate litigation, we can assist. We have another attorney handling those types of transactions. Yuri, you want to add anything else that I missed?
Sure. So yeah, so just to expand on what Igor said, so we've been around since 2010, and since 2010 we've been working on foreclosure defense and negotiating short sales. So, and then slowly as the market turned from the foreclosure defense market into real estate, that's when we really made the push to go into commercial, residential, and bank work as well. I am also a New Jersey attorney, so we do quite a bit of transactions in both New York and New Jersey. I think one of you mentioned the fact, I think Max, it was you mentioned the fact that there's so many more individuals that are moving out of the city and going into suburbs. I must have, I don't know, 3 or 4 transactions in my inbox right now that on New Jersey properties, right? It's been crazy. I was just reading just before we started this Zoom chat. I was just reading the properties in New Jersey that have been listed for hundreds of days are flying over the market. So people are really considering, especially with the unrest, that people are considering, you know, selling their properties here, you know, packing up and heading out to the suburbs. So there's definitely potential for deals out there, right? People are panicked. People make, you know, interesting decisions, and potentially, you know, if you're there with your team, you're able to close fast, right, and give people what they want. At the end of the day, why wouldn't you be able to pick something up? So it's very important, just to expand on that now. It's very important on the transactions world, whether it's, you know, you're buying a 1-family house, a co-op, or, you know, a 5-unit or 10-unit, is to have a team lined up and ready to go. Whenever the need or your offer gets accepted. So it's never too early to touch base with, your finance guy, your attorney, your inspection or whatever. If in the event that there's no inspection, just to have your team together as soon as something comes in. I saw there was a question there, Max.
Yes, there is. So we got something from Mike. It looks like this one is about financing, so I guess I'll be the one to answer it. So my wife can invest in property under her LLC. We just finished a rehab and we are waiting on the CO before she can have her tenants move in. Can she refinance Express Capital into a 30-year mortgage? So Mike, just to make sure I'm understanding you correctly, I'll elaborate a little bit on that. So pretty much when it comes to refinancing a property, we do want it to be occupied. We do want to know that there's a lease in place. Now, not all the times are the leases already existing. Sometimes it could be something that, for example, you have it signed for July 1st, they're going to move in. We can start underwriting those files, but as long as the tenant is moving in at the time of when we're funding and they're there at the time of funding, that should not be a problem. So to answer your question, the tenants could be in there for a day and they will be able to refinance. But also one more thing, Yuriy, that you mentioned about, like, we're talking about this moving thing and how everything's kind of impacting. The interesting part is that there are parts of the real estate market that are increasing right now in value. For example, New Jersey, I'm going to use this one because this is our backyard. This is one we know and we're seeing it. We're looking, my family's looking for a property out there right now, and we're just getting into bidding wars on every property we look at. And then yet when I speak to my realtor friends and broker friends out here in New York, they're just telling me like, hey man, I mean, Manhattan used to close, if I'm not mistaken, don't quote me on these numbers, but I think Manhattan MLS used to record about 3,000 sales a month. I think right now we're at about 300. So you could see that there's a drastic change there. And again, don't quote me on those numbers. I could be off, but if I remember speaking to someone, it was just around there. But bottom line was the numbers were drastically changed. So obviously keep in mind, look at which markets you're in, see what's happening, look at your comps for these last 2 months, see what has happened, not in January and February, but March, April, and May will say a lot about where you're investing. And then I guess Mike asked the follow-up question, how long do the tenants have to be under her LLC? Well, the tenants are never going to be under her LLC. So I guess you're asking how long does the property have to be under her LLC? It depends on what kind of property we're talking about, if it's a multifamily or a single family. If you want, you could definitely give me a call and I'll go into that. But just to elaborate for those of you listening, wait, there were 2 different questions. Oh, so I guess, Mike, do you want to speak? If you want to raise your hand.
He was just saying, I think, how long does the tenant have to be in regarding the the vacancies? That you already answered that. He said 1 day, and then he said under her LLC.
Right. So as far as the LLC should be seasoned. I mean, if you didn't buy it in the LLC and you transferred it, I would say 2 months is definitely reasonable. But if you just transferred it over, talk to us. If you're about to transfer it over, talk to us before you do, because we may have some solutions to get it done right then and there without having to make it confusing. So that's that. Are there any other questions?
Yeah, I just want to bring up one last point. If there's no other Max, just like you answer those questions to Mike, and anybody who else is listening, I hope you could take this and speak to your attorney, speak to your mortgage guys, and say, hey, listen, this is the situation. Okay, I'm about to open up an LLC, or I'm about to do this. Don't just do things without asking and finding out the people that are seasoned and know how to properly get it done, right? Your real estate guy, your mortgage guy, the attorneys, structure it where we want to structure it properly for you on the contract. Tell us what's going on so we can protect you contractually, so you could get them the right finance, just like you mentioned, the property is vacant, but you said you could get a lease potentially. These are the things people feel like a lot of times they're scared to tell the truth, and they end up not be able to fund because they didn't tell you the proper way of going about it. And I see that a lot in the last 16, 17 years in the industry, that people try to hide the truth, and instead it burns them in the end. Rather be upfront about everything, and somebody like Max can structure the deal for you. Maybe you won't close this month. Maybe you need to structure where you're going to close next month, or got to fix it, or amend the operating agreement, or whatever it takes to get it done, but just to be upfront with the people that you're working with and give that courtesy and respect.
Absolutely.
I'll tell you to say a little more. Actually, I tell that to my clients. As soon as they, on the residential side especially, as soon as they enter into a contract, any decision you make about your life, right there, you're talking to your mortgage broker about, right? Whether you're changing jobs or quitting jobs or, depositing cash into your accounts, you're talking to your mortgage broker about all of that before you do it. I mean, you're only going to be in contract for a short period of time, whether it's a month or 2 or 3 or 2 weeks, whatever it is. At the same, you have to be anything you do financially in those kind of scenarios. You should speak to your loan officer, mortgage broker, whatever it is, and obviously, if you do anything else as far as legally goes, same here. We're here to help. We're here to. And so is Max. I know Max is very accessible. Obviously, he'll do a Zoom call with you if anything. And we'll be glad to answer any of your questions. It's better to ask before than to dig dig you out of a hole after.
Absolutely. You're not wrong about that. You guys said it on point. I almost can't say it better. Everything will come out eventually. So if you feel like you can't be honest with the person that you're speaking to, you're probably working with the wrong person. Surround yourself with the team that wants to help you, that wants to see you succeed, and they will help you succeed. There's no questions of can we or can't we. We always can. The question is how. So we had another question. We closed under her LLC. I was told because of COVID, the banks are no longer lending to LLCs. So Mike, that really depends on which bank you're working with. Everyone has their own guidelines. Everyone has their own changes that they've made. What it comes down to in the end of the day is what kind of bank you're working with. Someone like ourselves at Express Capital, we personally only want to lend to an LLC. We don't want to lend to you if it's in your personal name. We prefer it that way. Whereas some other banks don't want to lend to an LLC. They want it to be in your personal name because you are the one that's PGing it. It's based off of your income. It's all based off of you and so on and so forth. So the short answer is, yes, we can still lend to your LLC. The long answer is it all depends on which bank you're going to as to what their guidelines are going to be and how they're structuring their loans. So I appreciate everyone's participation here. Thank you so much, Yuriy and Igor, again for being here with us tonight and sharing your experience and your knowledge with everybody here. I know we got a lot of new investors that are listening in. They're trying to make their way through. So guys, reach out, bring your questions up. Let's work as a team. Let's get deals done and be safe.
Thank you. Thank you,
Max,
everyone.
thanks so
Thank
much
you,
for
Max.
having us. I appreciate it. Thanks, guys.
Take care, guys. Have a wonderful night.
You too.